Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. I'm starting off with the daily candle chart of the Russell 2000 index, ticker symbol RUT, because I'd like you to get a good picture of what the broad-based index looks like. And as I do each and every week, I left my lines on the chart from last week's report, where right here I said the Russell 2000 would most likely drop first early in the week and possibly test this support level, and that support level is taken from the low on August 5th, and that low is 1472.66. As you can see, the VIX did drop, and it dropped more than I expected it to. Yes, I did expect the test, but we briefly broke down below that support level, and then on Friday, as I'm recording this right now, on the 16th of August, we have a bullish engulfing pattern that is quite significant, because if I zoom in a little bit more, you'll see that this particular candle does not have a shadow underneath the body. So what that means is the Russell 2000 opened up on the low and closed very close, within pennies of the high. If you look at the intraday minute by minute chart, you'll see that's exactly what happened. We opened up right here, stormed up, and closed right at the highs. So what does that mean for next week? Well, if you look at the volume, that's something that you won't see on the Russell 2000, but you'll see it on the diamonds, the spiders, and the Qs. You'll notice that the volume picked up today across the board, and so we will analyze that volume as we look at the other indices. But the big signal right down here is that stochastics oscillator, and you'll see as I magnify that, you'll see that the blue line, which is the %K, is just now crossing the %D, which is the red line, and that's a buy signal. If you notice down here, the CCI crossed above this horizontal green line, which is the -100, and that gives us a buy signal there. So we have buy signals on both of the oscillating indicators. We have a bullish engulfing pattern up top. And what does that mean for next week? Well, I believe that we're going to move right back up, and I'm going to leave this line as my target, the end of the line being the target price for next week. So that's the Russell 2000. If I look at the diamonds, it's ticker symbol DIA, it's Dow Jones Industrial Average ETF. Again, you'll see that I left my lines from the forecast last week on the chart. I said we would most likely drop Monday and Tuesday. We did that. Wednesday, we dropped even more. Thursday, this is a doji. That's usually a sign that we see at pivot points. It's a sign of indecision. And today we have a green candle. The CCI down here crossed with a buy signal. The stochastics is about to cross with a buy signal. So with the diamonds, I'm going to leave this in place as well. I think we're going to rally right to the end of that line, and I think we could also break out over that 20-period moving average, which could very well shift the momentum of the entire market. So that's the diamonds. If I go on to the spiders, ticker symbol SPY, I said that we would go up and pull back. Well, that didn't happen. We went up, yes, on Monday and Tuesday, but there was no follow-through on Wednesday and Thursday. But just like the rest of the markets, we see a doji here, we see crossing down here, we see a buy signal CCI. So I believe that we're going to see the market move right back up to that target. I'm going to continue on and drop the line at the same price level that I had as a target from last week. So I'll erase this, I'll leave the new forecast in place, and then we'll be able to see how the spiders worked out for the forecast. Now, one other thing I want to point out is that the VIX, and I say this each and every week, the volatility index is inversely related to the S&P. So we look at that as a leading indicator. If you look at the stochastics, momentum is shifting lower. The CCI is shifting and moving lower. We have a red candle on the VIX, and we have a role reversal support level right there on the VIX. So I think next week what we're going to see is a drop in the VIX. Now remember, because they're inversely related, what does a drop in the VIX mean for the S&P? Well, we just talked about that. I think the S&P is going to rally. Therefore, the VIX is the leading indicator for that. So my target is the end of that line. I think we'll go back and test that support, and then we'll have to reevaluate the signals from there. Finally, if we look at the Qs, which is basically the tech sector. Again, I said that we would move up to test that resistance and fill the gap, a minor gap right there. And guess what happened? We did just that. It moved right up to resistance and then pulled back from resistance after it filled that minor gap right there. See, if I draw that all the way to the right, you'll see exactly where the gap filled. It was in this area where the shadow is. 80% of the time, after a gap fills, the price generally reverses and goes the other way. Now that doesn't mean we're seeing bearish signs for next week. On the contrary, what we're seeing right now as we erase these is we're seeing bullish indicators for the Qs. I think we're going to move up to at least the 20-period moving average because the stochastics is getting ready to cross again. We have more or less a mixed signal with this one because the buy signal came right here. And if this continues to go up, the blue line, then the red is going to follow because the %D is more or less a moving average of the %K, which is the blue line. The good news, and this is the most bullish sign, is that the CCI is moving up. And I'm going to even forecast what I think we'll see for the CCI. I think it's going to go right back up. It'll cross over the 100 mark. At that time, it would be an overbought condition, and we'll have to see what happens from there. If the CCI starts pulling back after it's reached an overbought condition, then obviously the chances of a drop are greater. So that's it for our forecast. This coming Monday, we are having our open house Q&A session. That's our monthly meet with the audience kind of deal where we analyze stocks, answer questions. If you're interested in learning more about what we do, just go right down to the bottom of the page right here, and you'll see there's a register now link. And on August 19th, starting at 8 p.m., you'll be able to plug in. All you have to do is give us your email address, put your name, and that's it. Click register, and it will get you a seat so that you can listen in on our open house Q&A. So that's it. A crazy week in the markets, but guess what? It could be as crazy next week. So be prepared. Keep your stops in place. Use good risk management strategy and sleep well. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.